All right, everyone. Welcome to the PivotBoss Hangout for April 2015. Super excited to have all of you here today. And I wanted to cover the market for the next month of trading. This is something we do very periodically here at PivotBoss. As a matter of fact, if you're not familiar with what we do at PivotBoss, you can visit pivotboss.com right now. And you're probably watching this hangout from pivotboss.com because it is basically smeared across the top of every page of the site right now so that anybody can access it wherever they are. But basically, PivotBoss Hangouts is what I do every month and the first Monday of each month. In this case, I was away for about a week on a trip, so I decided to come back and do it on today, basically, get ahead of next Monday because we're going to have a holiday coming up. But I think there's some very important things that we should get out early on because April could be a very, very important month for the E-Minis. So basically what I do is I walk you through how I view the market, and I basically do live analysis. I give you my short-term predictions, longer-term predictions for the course of the month for the ES, the NQ, gold, and even crude oil. And we'll do this over the next hour or so. And basically my goal is just to kind of teach a little bit why I'm looking at these levels, some of my techniques, how I use these concepts to actively analyze and trade the market. And these techniques are techniques that I teach every single day at PivotBoss through Premium, my analytical software, and also through the PivotBoss Premium is actually the analysis arm of what I do. So I provide analysis through PivotBoss Premium and offer that 6 days a week. And I've been getting emails virtually daily about how my members are making money with this analysis. And if you're making money with it, always send me emails. It makes me so happy to read, and it keeps me on the right path here of offering that same type of actionable analysis to all of our members. But PivotBoss Masters is something else where I provide training, very, very detailed, in-depth training, and that's something that's coming up very soon. As a matter of fact, what I was putting up beforehand was PivotBoss Masters, and this is what I did last week when I talked about getting to know PivotBoss Masters. But basically, PivotBoss Masters is our training arm, and right now there's over 40 hours of premier training. PivotBoss proprietary tools are included as well for Thinkorswim and Market Delta, and others will be added very soon. And these tools will also be expanded for those that are already a part of our resource library. Continuing education and live training, so there's always education added, and there's also live training events that we hold. And the next one is actually going to be Monday, Tuesday, and Wednesday of next week. So there's going to be a 3-day live training event for our Masters members. You also get 1 month of premium included. Excuse me. And right now there's also Swing Trade Pro, and that's available as a bonus right now. And that is a 3-part course. That's pretty fantastic. 6 hours of swing trading training for that course alone, which is a $395 value. And this is a lifetime membership. So for those of you that want to learn a little bit more about this, you can stick around, and I can point you to a couple of videos and posts on the website where you can get more information. But right now there's a slick deal, and even I've extended the deadline through Sunday, so you're able to pay in 3 installments now just for this deadline, because it was a hot request over the last week while I was gone. Since I wasn't able to answer everyone's emails, I've made it available for another few days, so you can get a big time advantage with that offer right now. Excuse me, allergies out here in Austin right now are starting to pop out. But let's go ahead and get started with the presentation here about the market analysis. The ES right now, I think, is in a prime spot to see some major expansion soon. One thing that you may have noticed at the beginning of the last month was, for the last hangout, well, what I was looking for really, let's get a pencil icon here. Basically, what I was looking for, this is the beginning of March right here. And what I was looking for was right here, right? This was the zone, and this was our key level, 92s. And bulls were attempting to defend 92s here. What I mentioned was if those bulls fail to defend 92s here, you're likely going to see a rotation back toward prior value. And the market dropped significantly down into 2030. I then mentioned that bulls want to defend any pullback given the recent expansion to the upside. and we could see a move right back to 2100 to 2110. And in that case, we could see bears come in again and defend and push price back down to 2030, and the process would continue on. And that's exactly what happened. We got a trading range market, and we were all over it at the beginning of the last month. I mentioned that we could see a move back. Our premium members were ahead of this one on the way up and so forth, and we've gotten a very solid trading range market. Now, what that does is it creates acceptance in this zone. It creates digestion of these prices. It creates balance. So what you can see using volume profiling basically is I can come over here and I can grab a volume profiling tool and float it over this recent price data. So from here to here, say. And then we can develop this volume profile right here. And this volume profile looks at the volume at price of all of these key levels over this period of time. And I'm able to create a custom micro composite volume profile. And in doing so, I'm able to see all of the various price points that really mean something to the market. The biggest one is going to be the volume point of control. And that's going to be right here at that HVN. That's 2095 quarter. That is the highest volume level of this price range. And you can see it here. But this isn't a totally balanced range yet. If you can see right here, this profile is not balanced at all compared to what you would normally think a balanced profile should look like. Typically speaking, a balanced profile looks like a D with the volume point of control at the centermost of that D pattern. And that after price gets into a nice balanced profile, you usually see expansion one way or the other as a price discovery phase then occurs after expansion. And that's what we're looking for here. We're looking to see how much more development we can get out of this range. And then from there, we're looking to see expansion out of this range, because expansion could be significant. If we've been going sideways for 2 months and we finally break out of this range, we could see a 1 to 2 month rally or sell-off in the direction of that move, or at least a very powerful one at the outset. And another way to analyze this, if I pop back over here, and let's remove this for a moment, what we can do is add the pivot range, the monthly pivot range. And this is something that I cover in my book, Secrets of a Pivot Boss, something that I teach throughout my website and I use every day in my analysis. And the pivot range is based off of the previous set of data's high, low, and close information. So in this case, since it's a monthly pivot range, it's using the previous month's high, low, and close to calculate these 3 lines. Most importantly, the center pivot point, that's the high plus the low plus the close divided by 3. And the other level is actually the midpoint of the previous range, and whatever distance that is then projected higher or lower from the center pivot point to get the other side of the pivot range. And what you see right now is that this month's pivot range for April is very narrow. Look at that. Look how narrow that is. Anytime you have a pivot range that's that narrow, it suggests digestion. It suggests compression. After compression, you see expansion. So right now, this is a compression phase for the ES, and this narrow range right here implies that we could see expansion this month. So we're going to watch these boundaries very closely, 2030 on the bottom, 2110 on the top, for expansion down the road. Now, short term, the fact that price opened the month with a rejection off the bottom and then came back toward the top, that would imply that we could see a move to the top of the range to finish off another pass higher and perhaps create some better balance. So that's the early idea. And our analysis last night for premium members was to defend 2045 half today if you're a bull. And look at that right there. Because it was a minor CLVN, it was the midpoint of the previous tail there. And we saw some very nice support here this morning. And we were looking for a move into 65. And we got it right there. And then on the top side, the idea was for bears to defend 2060 to 2065 for a shot at reversing back downward. So we caught the range today perfectly for our premium members, and it was all based off of this content right here, and you can see it plain as day. The other thing about this narrow range, look at its placement within the previous month's pivot range. Here's the previous month's range right there. Those 3 lines. Look how wide the previous month's range is compared to the current pivot range right here. Super, super wide compared to the current range. Anytime you have a super wide range like that, it implies trading range behavior. that was part of the reason before that I mentioned that we could see a trading range month. So that's something to take away from this. Anytime you have a super wide pivot range, that implies a trading range behavior. Doesn't mean it's a foolproof thing that always happens, but it gives you a better idea of what could happen during that month and what to be looking for. And more often than not, you'll see that the market really plays off of that paradigm. Additionally, this pivot range for April is inside the pivot range for March. That's what I call an inside value relationship. Perhaps one of the most explosive relationships that you'll come across in trading with regards to pivots or any trading setup for that matter. And I cover it in my book, Secrets of a Pivot Boss. It's one I feature very prominently because it's a setup that anybody can use because it helps you forecast future potential price behavior. That allows you to plan out your trade. And from there, you can then plan out whether it's going to be an upside break, what do you do? If it's a downside break, what do you do? What happens if you get stopped out? How do you re-enter this thing? It allows you to plan your trades. And when you approach trading in that manner, you really get a leg up over others that are just kind of shooting from the hip at times. And in this case, the inside value relationship typically leads to a very explosive setup that allows you to scan for this relationship ahead of time. So you can know which issues, which stocks, or which E-Minis, or which ETFs, or whatever you're trading, which ones are due for a breakout in the upcoming period of time. Additionally, this setup can be used in any time frame. This is a monthly time frame right here, a monthly pivot range. So you're looking for the next month to be a breakout. But you can do this on a weekly basis, a day-over-day basis. For example, if I click these off for a moment, I can pop up the weekly pivot range. And these pink lines are now based on the week's pivot range. And that's one that's very, very important to know as well. So this is something I use time and time again. And in this case, the monthly pivot range to me suggests that we could see significant expansion ahead out of this 2-month trading range. Now we have to be able to watch the range very closely. So right now what I'm doing is basically watching the edges, and 2029 to 2035, basically that 5-point range right in that zone is an area to defend as a bull. And the idea is to get price back above these 64 halves. Remember, this is the big time range right here. Remember this 64 half down to this 54, 2009, that's the center of that key range. And you remember how price failed to hold above the top of that range? That's how I was easily able to identify that we were likely going to see a big time sell-off back across the range to begin the year. And we saw that move. We were all over that at premium. And now you can see right here, it still is a very important level. Price pushed through it here, attempted to make it support here, fell through it, recaptured it, and now it's just chopping around that level. This is a big time zone. So continue to watch 64 half as a major pivot. Above that level, I think bulls have short-term control back to 95 to 21. Below that pivot implies another retest back between 29 and 35. And right now, I mean, look at all these bulls right here. These bulls are defending that zone staunchly. So if price can't hold and we see a break below 29.5, that retest or just full-on break could be a major selling opportunity back to 2009 and even into 76 to 81. So that's my outlook here as we head into the end of April, throughout the rest of the month of April. And the big thing here is that coming into the holiday weekend, the extended holiday weekend, coming into some rather big volatility, but not really much movement here recently. I think we could see some major expansion here coming up next week, and it could be significant. So we're going to watch this very closely. Now, if we do get expansion from this range, one more thing about the ES here. Let's bring up, see this tool right here? This is the Fibonacci extension tool. And I use it for my, my key range analysis, my price range analysis. So I use it differently than what fib traders would use it as. But what I can do is come over here and create it on the recent range here. And that'll give me some key levels to watch as well. So basically the way I do this key range stuff is I look for the major impulse move in the chart. So in this case, price comes up to a high, can't get beyond it, and then sells off until it gets a low. Once it hits that low and can't go back, it hits the midpoint of the range. Once I have those points, That's my key range. That's all I do. And once you have that, you can see how the market trades based off of those key levels time and time again. So if we bring up right now the tool, let's go ahead and do this live so you can see this. All right, let's come over here and grab this extension tool. It looks like this here, so I can find the high. Actually, before I do that, let me grab the info box so I can see what I'm doing here. So the high right there is going to be 10 quarter. There it is, 10 quarter. The low down here is going to be 30.75, and the midpoint. So what you would do right now is basically take, you would take the 21.10 quarter, which I'm doing on a calculator, add it to the bottom, which in this case was 20.30.75. You take those two numbers, you add them together, and then divide it by 2. Once you do that, you get the midpoint of the range, and that's 20.70.5. So I put it at 20.70.5 right on the bar that hits that level. So that's what I do. So there's basically the key range right there. And you can see that. Here's the center, and here's the bottom. So that's really the range now to watch. If you're a trader trading this range, you're watching the high, the low, and the midpoint of the range. Those are the most important portions of the range. And right here, that's going to be your midpoint. And above it, that's the inside 25% to the top. This is the inside 25% to the bottom. Those are key ranges as well. So typically speaking, when the market is trading within those ranges, it's a very, very tightly coiled range. And again, it's something that we should be watching for expansion. So that's another key range right there that I'll be watching. Those are the key levels. And once we do get expansion, look at how easy it is to then begin to gauge where the primary and secondary target objectives are. So on the upside here, let's go ahead and squeeze all this into one frame. Here we are. So here's the top of the range right there. That's 21.10.5. This is the bottom, 20.31. That range is however many points it is, 80 points or so. And then what you would do is forecast that 80 points up from the edge, and that's your 100% expansion target to the upside. So if we break this thing to the upside, eventually you're looking for this thing to reach this target, 21.89.5. Okay. We also have this key range here from 54 to 64. That's a 110 point key range. So forecasting 110 points up from the end of that range gives you 21.75. So we have two different key ranges working for each other, both of them suggesting upside targets between 75 and 89. So that's a 15-point range there that has a lot of magnetism to it, because if we break to the upside, a lot of algos and programs will be looking to target those two key levels. So on the upside, over the course of the month, maybe 2 months out, we could be looking at a push into 75 to 89, and that could be by the end of May, for example. Now, if we fail to get beyond that zone, and instead we break this thing to the downside 100% target is right here at 1951.5, and that basically coincides with the bottom of the prior key range at 54. That's going to be a big time zone to defend. If price were to sell off to that zone, bulls will want to defend it big time for a push back up. So these are the zones above and below, and this is the easiest way for me to analyze price, because the market, the algos, the programs are all fixated on these price levels. That's how they extrapolate and forecast these targets. So my approach with the PVV method, price, volume, and value method, is to identify how the programs analyze charts and then mimic that, mirror the trade management behind it, mirror the analysis, mirror the forecasting, mirror everything behind it, because these are the ones printing money. And that's the way I focused my research over the last 10 years, and I was able to develop this approach. So continue to watch these levels for the ES. These are the big time levels that I think will be huge in the upcoming months once we get expansion from this range. Could be significant. All right, let's take a look at something else now. All right, let's drop this down. And let's take a look at gold. All right, here's gold. This is the June 2015 contract at gold. We recently switched over to this new contract. and I did some new analysis on it. So this is going to be very good for you because you're going to get some of the earliest analysis for this brand new contract if you're not in premium, because you've already gotten some of this analysis if you are. But first of all, the thing I do with a brand new contract, and this is something that you could really use, because it's always good to see how others approach the market. You learn more. You can incorporate what you like, incorporate what flows well with what you're already doing. In this case, what I do when I first get a brand new contract is, let's see, let's drop this down, is I drop down all of the base stuff, all of my indicators and everything, and I just put a straight price chart up with a volume profile. And this is the composite volume profile on the right. So this is the composite volume profile for all the data I have going back to 2010. So it's basically the last 5 years of data that I'm using for this profile. You can go back and do more, less, however you want, but the most important part is to get enough data for above and below the price levels where you're trading so that you get good analysis above and below and you're able to forecast in both directions. But secondly, the big thing here is this volume profile right here gives you all of the information you need to know to start off, to know what's important about this price chart. The first ones are obviously the biggest price points on that chart. Where are the biggest price points on it? The highest valleys, or the highest peaks. And then you look for the lowest valleys right here. And then I put dashed lines at each of those that correspond and mean something. MCVPOC means that is the micro composite VPOC of the range. So that's going to be the minor peak composite. So CVPOC would be the highest peak. So in this case, it's a little confusing just because of the fact that right here it says 1294.5 because that's the composite VPOC, and then I put out a micro composite range that just goes from back here that says it's 90.5 for that period of time. So there's two here. This one's the composite VPOC at 94.5. This one's micro composite at 90.5, and this one's 44.7 as now it was composite VPOC and it just shifted up after recent trading, I guess. So basically, these are the highest peaks. And what's important about those highest peaks are that denotes where value is. That's wherever the most volume traded, the most volume exchange hands between market participants, that's considered value because it brought the most volume to the market at that level. Wherever you have the lowest volume peaks, or volume valleys rather, the lowest volume valleys are considered rejection areas. That's where the market rejects those price levels. So you don't see much volume traded there because the market doesn't want to trade in that zone. It's unfriendly for market fair facilitation of trade. So in this case, 78 is a big time key level, and you can see how bulls defended it. Bulls defended that key level outright and made it a rejection point. You can see how it's been a rejection point for quite some time. So 78s are a big time level of support, and if they continue to defend that zone, the idea is that you go from rejection back to acceptance. So the idea is for price to come back to acceptance at 1244.70 if 78s remain intact. Now bears want to be able to defend recent resistance because you have minor LVNs right here. Not huge LVNs like the 78 LVN, but they're minor little price peaks here, rather valleys within these price peaks. And right there, that tells you, you can see the rejection levels right here. That's an area where bears are defending right now. So if price hits that zone, bears are defending first shot at running the stops through 78 and into prior support and perhaps lower. So this is the range right here. And if we kind of zoom out a bit, what you'll notice is that we have a very clear range that is formed over a recent period of time. This is the last year of trading, from last April to this April. And you can see the micro composite volume profile here on the left, the top of value, the bottom of value. And that's very important when you're able to see value in that way, because it really helps you see what the market participants are trying to accomplish. And what I mean by that is, if you look at this, you can see that this pink magenta line is value. This is the top of value. And this is the bottom of value right here. So anytime price gets below this level here, which is 1197, responsive bulls look to come in, defend those levels, and return it to value. That's always the goal. Bears, on the other hand, are looking to defend this level from below for a shot at keeping it offered, and that would lead to further downside price discovery to lower value or to create lower value. So that's what we're looking at here is how is price going to respond off these 78s? How's it going to respond off of the higher levels of around 1220 to 1225? That's the major zone right there. Once we come out of that zone, we should see some major movement to the beginning of April. So again, once we get done with this short-term holiday here, what we're looking for is going to be 78 up to 1220 to 1225. That's going to be your breakout zone to watch. Short term, if we put on the PIMAs here, you can see there's not really much directional help right now. It's just coiling. And anytime it's doing that, and what I mean by coiling, look at it here, and then you can see how the pivot-based moving averages are now neutral. They're just sideways. That tells you right there that price is coiling. So this is another way to show how price is coiling using pivot-based EMAs. You can see right here the standard ones I use are 21, 34, 55. And it really doesn't matter which way we break out of this range, it's going to be significant. If we get a break here, boom, we could be targeting 1290. If we get a break through 78, boom, we could be targeting much lower. What you could do is do a key range analysis on it from the high to the low and then get those key levels to get perfect expansion targets as well. All right, let's see. Let's move on now to crude oil here. Let's drop this down a moment and pop up. That's the RT one. Let's prop up the end of day one. All right, here we are. So the end of day look, so this is a daily chart of crude oil. This is one that we've nailed perfectly for so long. I want to put out a video, kind of a greatest hits video to show how we've done it premium, because we've pretty much nailed this move on many different counts all the way down. We nailed this move on the way up, got all this. I mean, it was just perfect how we really marched forward with this analysis, PVV method, and just applying it to this chart. We've really knocked it out of the park. And what we're doing right now is looking at how does price respond to the recent price activity here after price is coiling up. Because we had the bottom of the key range here at 45.52. We had the top at 56.07. That creates our key range there with the midpoint at 50.80. And as you recall, I was looking for bulls to defend the midpoint in this zone for a shot at the top of the range. And we got it a couple of times. Eventually, it failed. And I mentioned once it falls through that zone, we're likely going to see a quick move into the bottom of the range with a shot at seeing further downside expansion. So we nailed that. But once we came in here and we saw that bulls were defending and bears weren't able to get this thing lower, 47.5 became a big time emphasis for us, because once we got that upside break, I mentioned we'd likely see a move back to value. And we did. And that happened while I was away on vacation. And then I mentioned at that same time that if we do get a move into value, look for bears to defend it for a shot at reversing this thing back to 47.5. And we got it again while I was away on vacation. So I was able to alert our premium members ahead of time while I was on vacation that this move could happen. And if it does, that the reverse could happen. So we nailed it again perfectly. And that's why crude oil is one of my favorites. I mean, I know it's very difficult to trade for many, but many traders aren't really skilled in risk management, trade management, discipline enough to really trade a crude oil contract. But it really respects and honors auction market theory very, very well. All of the pattern analysis and price key range analysis that we do just works phenomenally. And I've created algos right now that are popping off phenomenal signals for crude oil that just work time and time again, and based off of intraday events and end of day events. So it's just one of my favorites, but you can get chopped up. Even pros, even salty veterans can get chopped up if you don't keep with your discipline. And that can be said for anything you're trading if you don't keep with discipline. But right now we have a very solid coil that's happening where price is basically coiling up again. And what do I mention about those coils? They lead to major expansion opportunities ahead. So we're going to be watching this one again, because once we get a breakout, either through 47s, 46.84s, or really, this one's tough to call on the top side. I think you have to get beyond 53s to start really clearing some air. But short term, you could be targeting 50.80. You know, if bulls can get through 50.80, make it support, now you're reclaiming the center point of the key range. And by reclaiming the center point of the key range, that would imply a move to the top of the range at 56, especially after a failure to get through the bottom of the range. So what I tell my traders every single time is failed range expansion is one of the best trades you can do. It leads to some of the best reversals, because down here, bears were unable to get price to see range expansion to the downside below 45.52. And when they failed, I think it's a high percentage, 80% of the time perhaps, you see a move back across the range. And that's what we're currently in the process of doing. So right now, I would say that 47s, that LVN right there, is the most important support zone between 47 and 47.36. Bulls are defending that area for a shot at pushing this thing back to 51.72 and perhaps even into 53.44 and 56.07. So that's the idea right now for bulls. Bears, obviously, I said this before, are defending 50.80 right here. So our traders know that 50.80 is a big time zone to defend, as is value and the top of the range. Right now, bears have owned this trend in crude oil. So if price gets overbought up here, this is the zone really to focus in on for bears. I would say right here where the volume really falls off for bears, between 53 and 54, 53s, that zone right there is going to be super important for bears to defend, because that's where the volume really starts to fall off. Everything else right now, there's a chance to get squeezed. But once you come up here and the volume pops off, drops off big time, that's going to be the area to defend and reverse this thing back down. Because if bears can chisel through that 47, you can have a major sell-off ahead, likely into 34.98. And 34.98, the reason I mentioned that level is because it is the 100% expansion target of the key range to the downside. So again, we've been in a predominant downtrend in crude oil. And here is the bottom of the key range. Here's the top of the key range. This right there, that's the range right there. So if you project that full range downward from the bottom of the range, again, you get a 100% target at 34.98. The reason it says 150 here is because it's measuring from the center of the range. The center of the range to me is always the 0 point. So really this is 100%, and that's 34.98 on this contract. So again, if we don't hold 47s, I think this thing has big time potential to drop into 40.25, maybe get a bounce back, and then sell off into 34.98. So that's the path that could occur as well. So right now, we're watching this very closely. You know, it's hard to say which direction with clarity that we're going, because bulls were able to defend value here and again here. Those are signs that we could see a move into the top of the range, especially after this failed expansion. But if bears come in up here and defend like I think they can, that could be cause for a huge sell-off, because they've owned the downtrend over the last 6 to 8 months. All right, let's take a look now at another contract. Let's take a look at the NQ. Let's go to the NQ. All right, here's the NQ, and this one looks very similar to the ES, obviously, right? You see that the main difference is that this one had a better overall feel to it in terms of price movement, price structure. Right here, 43.37, the top of the key range was major for us. That's an area where I mentioned right here, if once we push through it, because I mentioned right here, bears were defending it. And I said that doesn't mean they win, because if bulls push through that level and make it support, look for 43.37 to be the area to buy ahead of a move to the top of the range. That's how we started this thing midway through the month, after saying that this zone right here could lead to a push back. So last March, at the beginning of the month, when we did the March Hangout, I was looking at this zone right here, and I said bulls are defending right now for a shot higher, but they've been defending for almost 2 weeks. And if they can't defend that zone, look for this thing to drop all the way back to the midpoint of the previous range. And we got very close. And then right here, they pushed it down below 43.37, attempted to make a resistance, but when they failed, one of the most classic swing trade ideas is to put your buy limit right on that same resistance and make it support. And right there, 43.37 was a perfect buy, and our buyers caught that swing move all the way back up. And then again, once we came up here, we were talking about bears defending between 44.60 and 44.70. First shot at dropping this thing back to 42.70, and we got that move. So another solid move there. And then I mentioned that bulls would defend here for a shot pushing this thing back up, and they did. But then it wasn't a successful follow through. It came back and bulls defended again. So big time movement overall. I did mention also that 42.90 was going to be an area to defend today for bulls, and bulls caught it. 42.90 is perfectly right on that zone. I mentioned bears would be defending between 43.30 and 35, but we didn't get quite that high. Instead, what we formed was an inside day. That's a big time pattern here. I love this pattern. This pattern occurs when you have a minor trading range day that falls inside the range from the previous session. And that inside day pattern right there is a significant pattern. And you can scan easily for that pattern and that setup. You can trade this setup in any time frame, any instrument. And the last time I talked about this pattern was right here. And I mentioned we could see significant expansion regardless of direction. And I said if we break the 2-day range lows, this could be the opportunity to trade this thing back to support. So the last time we saw that pattern was right here, and now we're forming it again. Are we about to see the same move back up? We'll see. Because I think if we do push back above this 43.37s, I think you see a move back to value of the composite range, and that's 44.29.25. So that puts you right back toward the top of the range. So that's what I'm looking for with regards to the NQ right now. We have an inside day that's expected. We have a holiday coming up in the upcoming session, and then we have the next week that's going to start May off, and it could be huge. Additionally, right here, narrow pivot range for the month of March, just like the ES, and it's inside the pivot range from the previous month of March, which again is an inside value relationship using the pivot range. That right there, those, when you have an inside day and an inside month, I mean, all you need is an inside week, and now you have the trifecta, and this thing just leads to a massive move. But again, we don't want to front run any potential movement. What we want to do is watch for the break and trade accordingly. In this case, what we'd be looking for is a breakout from the current range, and especially the 2 range high and low. And from there, look to defend the resistance as support if the thing breaks to the upside for a shot higher. Or if it breaks to the downside, then we'd like to look to see if it makes it resistance and then push this thing into the next lowest levels, which would be the next HVNs below 41.53 here and 42.12 here. So that's the outlook here for the NQ. I mean, it very much mirrors the ES. We have the inside value relationship and inside day relationship. One thing that encourages me that I told my members last night, and you're getting this almost first here, is that this is the previous month's low right there. And that's 42.71.5. See, M low, that's the previous month's low. There's a black line right there that denotes it. Right there, you can barely see it. The previous month's close is here, and that's that black line right there. And it's 43.29.5. And this is the previous high here at 77, 44.77. You can see that black line. Okay, what I told my members last night was I'm very short-term bullish about the NQ because of this failed range extension right here. So on the first trading day of April, April Fool's Day, we get a move below the previous month's low, and bears failed to hold price below that level. When price failed to hold below that level, you saw a short covering rally that pushed price back up. And then I mentioned that any pullback to 42.90 would want to be defended here for a shot higher. So that's the short-term swing trade setup right there for a push back toward value at 44.29, all because of failed range expansion. So I mentioned this failed range expansion, however tiny it may be, implies a move likely back toward the top of the range, especially back toward the midpoint and then back toward value. So right now, that's what we're looking at as the primary trade objective. But if we get above 43.37, again, that's going to be a zone. So if you push through it, a zone to defend for a shot higher. Now, on the downside break, you want price to really, really push through that support here, because there's another LVN here at 248. So if price drops here, that could be another area where bulls are looking to defend for a quick push back. So I think any push downward is going to see more buying support by bulls, because every push down has been defended for a very long time, because we've been in an uptrending market. That's all we've been. We've been in an uptrending market for several years now. Every pullback is a buying opportunity, and I maintain that stance until we see otherwise. And I've been bullish for many years now because of that. So even if we break to the downside and say we sell off big time all the way back to 40.74 to 40.93, the bottom of the previous range, this would be an even better buy opportunity here for a shot back up on a longer term position basis. So even if we do break this thing to the downside, it doesn't mean we're going to sell off forever. It means you're going to get a quick move down, and then you're going to see bulls come in, defend for a shot at new highs. So that's the look there at the NQ. So that basically completes there the PivotBoss Hangout Market Outlook for April 2015. If you want to stick around, I'll talk a little bit about PivotBoss Masters here for those of you that have some interest, because I did do a deadline extension last evening because I was away from the office. I was on vacation with my family over the last week. I wasn't able to get to all your emails, so I extended the deadline. And in extending the deadline, you're able to now receive over $6,000 in value for just $9.95, but you now have the ability to pay in 3 installments if you choose. So that will only be available through the deadline extension, which is April 5th, this Sunday, because on April 6th, on Monday, we're going to begin our live training. So we have a 3-day live training set up next week. And we also have live training that's been archived from last year. We have a 5-day live training from last May 2014 and another 5-day live training from October 2014 that's been archived. So you have all of that already there. And you actually have over 40 hours of premier training here, including all the courses available. Obviously, you get all the proprietary tools that I teach, which is going to be PivotBoss pivots. We have PivotBoss bands, PivotBoss ADR method, PivotBoss PIMA method, and then you have all the other tools as well that are just basic pro tools. Right now, those are available for Thinkorswim and also for Market Delta. I also have tools for Nirvana products as well, and I'm going to be building others as well over the next few months, which is going to be fantastic. You also get 1 month of premium included, which is my analysis service, where I provide trade ideas and analysis, the best in the business in my opinion. 1 month is just $99, so that's a $99 value you're getting. As soon as you get onto the course right now, you're going to get a 3-part swing trading course right there on your dashboard. This is 6 hours of training right here, the best I put out before Masters, and that's a $395 value right there. And people love that course. So you're going to get 6 hours of training right when you jump on of swing trading stuff. And then you're also going to get all the other core training as well. And then we're going to have our 3-day live sessions. And that's going to be a $995 value. That's going to be 3 hours each morning from 8 to 11 a.m. Central. Next Monday, Tuesday, and Wednesday. Each one of those are recorded and archived immediately that same day. So our members are able to have it and replay it at will. And then you're going to get all of that stuff for just $995 right now. It's over $6,000 value. This is the best offer I've ever put out. But this is a lifetime membership too. So you pay once, you never have to pay again for my stuff. So for those of you that paid and are members right now, you know that you paid in 2 years ago, and you're getting all this stuff right now included for free because you've already paid in. So that's what I'm trying to do with PivotBoss Masters. I'm trying to make PivotBoss Masters affordable for everyone, so they have everything they need to get started to become successful traders right out of the gate. And I'll be honest, right now I'm putting extra work in over the next few months that's going to make Masters even better than what it already is. There's major things to come, major scans, signals, algos, all kinds of stuff that I'll be building that my Masters members will be getting in the months ahead. So it's going to be fantastic. So if you want to learn more about PivotBoss Masters, what you can do is you can actually go to pivotbossmasters.com. And from there, you can see there's the special offer is extended for another 3 days and 8 hours. And if you scroll down here, you can learn more. So if you're a prospective member, you want to learn more, it'll take you to the Learn More page here. And right on the front here, this is a presentation that I put together about PivotBoss Masters just last week. And Many of you may have joined me as well, but from right here you can actually see more about masters and get your questions answered as well, and or see what the frequently asked questions were in there. But this is a great presentation that really gives you a lot about what masters is and who it's for and what you'll learn. So this is a lot of great stuff here. This is a huge page with so much information, and you can check it out. Check out all the great feedback I've received for it. And again, at the very, very bottom, limited time offer. Just for the next few days, you can pay with 3 payments if you want, or you can just go with one right here. It's $9.95 for a lifetime membership. Expires April 5th, and we're going to get going with live training April 6th, and then you're going to be exposed to over 40 hours of premium training. That's going to be fantastic, in addition to all the resources we have and all of the new stuff coming up down the road. So this is going to be a fantastic opportunity for those of you that that want to become better traders. One thing I can always know about traders that are coming into masters is I know that they are eager to learn, and I know that they've already mastered the first concept of trading, which is identifying value. When you can identify value and buy into value, you always have a shot at making money, regardless of if you're trading or if you're selling houses or if you're selling cars or if you're selling anything. If you can identify value and sell it for a better price, you're always doing great. Or if you can just identify value and buy it cheaper, you're always doing better. This is a value that you're not going to find anywhere else. So I always know when someone's ready to come in, they've already mastered the first concept of trading, which is identify value and execute. And this is one right here where everything's lined up for a perfect opportunity. So if you want, you can also go to pivotboss.com. PivotBoss.com also has a whole lot of great information and free stuff. So right now we're actually, you can see up here the Hangout that's going on. I can click it. We can be double projecting here. But right here, if you go to free content, this is where the Hangouts are. So if you want to see this Hangout again, or if you want to see others, you can click on that link right there. And this is the one that's already posted. So right now, as soon as it's done, it'll be uploaded, fully uploaded, and you can access it here. But you can look at March's Hangout. Here's February, here's January, and even the ones from last year. So that's something where you can go. There's more free content as well: education, lookbooks, recent winners, a PivotBoss commentary, which I'll be producing more of that soon. And if you are new to PivotBoss and have not yet heard about my book, Secrets of a Pivot Boss, it really is one of the best trading books out there. I get amazing feedback from traders all over the world that have heard about this book and love it. And I get just amazing responses for how much this book has meant to their trading and for opening their eyes to how trading really goes on. And it's just something that I'm so proud of, because I worked very hard to make this come to fruition. And I'm so proud of the results, because traders have benefited from my book. And it's the cheapest value you'll get around. For $69.96, you're going to get some amazing education. In addition to that, you'll also get my brand new course, Introduction to PivotBoss Pivots. It's a 2-hour course that gives you the pivots, teaches you about my PivotBoss pivots, and then also provides custom PivotBoss indicators for Thinkorswim and Market Delta with regards to those indicators that relate to the book. So you're going to get some fantastic insight from the book for just $69.96, and then you're going to get additional value on top of that. So as soon as you buy this thing and add to cart, as soon as your payment goes through, you will immediately be sent to a page where you can watch this Introduction to PivotBoss Pivot. So you could be watching this in the next few minutes if you wanted to, and then your book could be mailed out to you same day. So I mean, this is a huge opportunity right here. And again, you can read more about it as well if you scroll down, so you can get more information about all of this and what others thought about my book. So with that, I want to say thank you all very much for joining me here today for the PivotBoss Hangout for April 2015. I'm looking forward to seeing you soon, and I'll see you next month. Take care, and I'll see you soon.